you can't anticipate when it's going to happen, but you can prepare yourself for it happening in the first place. And that's normally due to wicks, guys. A lot of people, entering the market. Let me get that out of here. A lot of people entering the market. And guys, share the link if people are trying to get on. I don't know if people are having difficulties getting on, but definitely share the link with people if they're trying to get on. But there's a lot of us that have entered in the market, and for whatever reason, we're, like I said, we're bullish or bearish, whatever the case may be, and all of a sudden the market just shoots the opposite direction on us, or probably close to 5 o'clock, or when news comes out, and it's like, man, I did all my analysis correctly. Even though we don't control the market, we're still hurt that the market actually did that on us, ladies and gentlemen, right? So what we're going to do is factor into wicks, where a lot of people are missing that. They're ignoring that. You're seeing a lot of wicks in the market. That's giving you a tall tale sign that the market may want to collect what? Liquidity in the market. Now, there was a pair that I wanted to actually show that off of, and I think it was GBP Swiss franc. All right, yeah, GBP Swiss franc. So, and we're probably actually going to create an analysis off of this, guys. So GBP Swiss franc, right? No, you still have to play the part, ladies and gentlemen. You still have to play the part that you need to when it comes to the market. So right now we're in an uptrend, right? So really the only thing we should be looking for is potential uptrends. Now, I want you guys to keep an eye on, well, not necessarily keep an eye, but this is a factor right here. That wick right there. That's a factor in the market. And we'll kind of come to that later, guys. But this is what I've been looking at. One, I was looking at GBP Swiss franc. Now let's push out. Let's see if we got some news too. Make sure nothing can throw us off. Now, guys, daily time frame. Entertain me, guys, because I like to be interactive with the audience, because it doesn't help me speaking this because I already know how to trade. It helps you guys because it gets you in the thinking process of, like, when I'm in the market by myself and I don't have an educator or a trader local to me right there or going over stuff. How do I, view the market? How can I literally, get my thought process working where I can pretty much survive in this market by myself? Guys, that's how I roll. So please answer questions with me. Try to think, even if you're wrong. Nobody gets points off for being right or wrong, guys. It's just helping you, because you better try to understand how to make this money. Understand me. So what trend are we in right now for GBP Swiss franc? Somebody let me know. What trend? That means uptrend, downtrend, consolidation. Let me see what we got going on. Uptrend. Okay. All right. People been in the academy. All right. I ain't trying to insult nobody's intelligence, but correct. We are in an uptrend. Since the daily time frame, guys, we have been on an uptrend. Even if you were confused, if you were a break and retest type trader, what is this right here? This was consolidation and then a breakout, correct? Now, the only thing is, does price want to fill this before pushing back up, or does it want to just go ahead and clear this up? This is where we have to make a decision on what the market is currently doing. Now, the reason why I started off on the daily time frame, guys, because it's what we need to create an overall bias of the market, so that way we don't confuse ourselves on the overall direction. We do know there are retracements, aka pullbacks, happening in the market, but with that, you just still want to find the overall direction. So cool. We're all agreeing that we're in a bullish market, but we do have potential for strong pullbacks, sell positions, things like that. Now, guys, I agree with you. So with my mind being like that, I agree that we're in a bullish market. It just depends on if price wants to hold its support. Now, going into Wicks, because I'm going to, get to my point about this, guys. I found the best definitions of Wicks that I could find on, our favorite Google, right? So what I did was just type in Wicks and Forex, because I wanted to have an accurate definition other than me just saying like what I know Wicks are. I wanted, to have some type of textbook material. So it's like, what are Wicks, right? A wick is a shadow. Now, this is dealing with foreign exchange. So don't just type Wicks and it's telling you about something else like that's not dealing with foreign exchange, right? So a wick, according to Google, a wick is a shadow, or a wick is a line found on a candle in a candlestick chart that is used to indicate where price of stock has fluctuated relative to the opening and closing prices, right? So that's kind of like what I showed you guys last week when if you guys have that website that I gave you, Trading Campus Candlesticks, it showed you the opening high and the opening low, I mean the closing low. So price opens at a high point and closes at a low point, no matter what candlestick it is, and that's normally produced through the wicks, right? So these shadows, wait, hold up. Yeah, okay. Essentially, these shadows illustrate the highest and lowest prices at which a security has traded over a specific time. So basically what I just said in layman's terms, if you're confused about that definition. Now, what I want to do is talk about like wick fill and like what wicks do. So let me see with this, blah, blah, blah. That's not the one I looked at. So if you just wanted to look at a long wick, right? When the wick is short, is indicative of trading that was most likely held between open and closing prices of that period. On the other hand, when the wick is long, it signals that price action has crossed the borders of an open and closing prices. So in layman's terms, guys, when you see those small wicks, that's probably just consolidation. When you see a bunch of them, that's probably just consolidation. The market hasn't made no decisive move. But when you see long wicks, many of us have seen long wicks, definitely we trade cryptocurrency, and then price shot up from there like aggressively. And then you're thinking that, oh, well, I was taught that if price leaves that area super fast, it's probably rejected it. That is true on certain time frames. Like if it's doing it in a consolidating period, but if it's doing it in a trending market, guys, it's probably going to fill that. So it probably just retested aggressively, and it's going to fill that with what? A candlestick, guys. And I'm going to show you that. What was the last one? A wick fill. And this is pretty much what I was just talking about. A wick fill, guys. So wick fill trading strategy. I didn't even read this part, but how to apply. The wicks in a candlestick are basically price rejection points. Now that is true, right? We understand that it's price rejection points. They signal unsuccessful price movement of an asset. Now, I really want you guys to pay attention to that. Unsuccessful price movements of an asset, right? And then we're going to show that on the chart. This information can be used to identify several trading signals, right from support and resistance level to future trend movements and reversals. So basically what it's telling you that if you see a wick, you can use that as a target. You can use that as an entry. You know what I'm saying? That's all that is saying, guys. And you can find that, you know, on your own if you guys want to, just by going Google. Now, this serves a purpose, guys. This serves a purpose, definitely. Now, right here is, I think, when was I trading this? Let me see. I'm trying to find a depiction of where it had like a bunch of wicks. Where are we at? Let's just say for this sake, like it's already good. So we'll use this analysis to pretty much define what price is going. Now, guys, as you see right here, price, we've already established that price is in the uptrend, right? And we do have a lot of wicks right here. We have strong, long wicks right here. But guys, you need to understand that price doesn't have to cover the full wick, right? It just has to gain a percentage of it. No, so right here, as you can see, price went away from that fast, came down. Once it crosses wick, I look at it as liquidity grab. Like I don't have to worry about this until price is showing me that, yo, I want to kind of break down to actually collect all of this and then bring it back up. So when you're seeing wicks, guys, you got to look at these areas, especially these long ones, and then they're on higher time frames. You have to look at price like, okay, price may want to collect that, right? And that's why I circled this. Price may want to collect that instead of pushing up before it decides to push up. It's just whatever price decides to do, and you have to figure out what price is doing, obviously, with, you know, it's starting a downtrend or an uptrend. So right here, I see a lot of short wicks on a 4-hour time frame. I'm not too concerned about this. AJ, I'm doing my class, man. I'm not too concerned about this because price already moved away from there. The only objective is, does it want to collect this to bring the market back up? Because me personally, I'm looking at GBP to be what? Bullish, because we all agree that price was bullish overall on the daily time frame. Now, my only hesitation is that I look at where the market came from, guys. Yes, it came from here, but immediately. That's why if you ever follow Warren Wright, he always talks about, you know, starting where the price is currently and then snaking your way back. So what we care about initially after we've created our bias on support resistance and the overall trend of the market, we want to see that is price. We want to start from right here where price is currently at and start working our way back to see if we can understand this information to see is like, okay, is this truly wanting to sell, or is price deciding to collect liquidity and then push the market up? One, we already created that bias that price is bullish, so we should be looking for buys unless price breaks this market. Now, here's where it comes to into being patient, because you don't want to put yourself in a bad position by saying, "Oh man, let's buy here." True, you do want to say that, guys. I would be comfortable saying this is in my support structure, buy here. But for other people that want a little bit more confirmation, because we have wicks in both directions, you probably want to break and close above a certain area, right? So I would probably want a break and close somewhere above this. I like that, for us to actually buy. That way we protect ourselves just in case prices decide to say, hey man, I'm zooming down. Now with these wicks, guys, you see these wicks up here? That's why my bias is more lenient on, my directional bias is more on the buy, or at least price collecting this liquidity, which would do what? Bring the market, push the market up, right? Do y'all guys see all these wicks right here? Drop a 7 if you see all these wicks right here. And I want everybody to kind of understand that yes, when price moves away from these areas, it truly is rejecting. But if it comes to another area where there's a wick at and it collects that liquidity, it might actually reverse back on you. So right here, most people would say, oh man, rejection, rejection, rejection. This thing is probably going to push down further. Me, I'm looking at that like as many times as it rejected, it has to break through that at some point. So with it struggling to reject, and then we had a strong push down, I'm wondering if price is going to actually shoot back up to collect that liquidity, because you have to start looking at these wicks, guys, as liquidity. You can't be fooled into the same notion of like, hey man, if the market rejects just one way, it's probably going in that direction. True, you do want to create that overall, you do want to get that overall bias, guys, to see is the market continuing. But don't be fooled by saying, oh man, it's in a downtrend. I see it falling down, and that so I'm just going to create a bias on that, guys. You see what I'm saying? So like for right here, you can clearly see all the way on the 4-hour time frame that this thing has been in a downtrend, right? Everybody agree with that, right? Drop a 2 in the chat if you agree with that. That this thing, that GBP Swiss franc has been in a downtrend since, what day is this? The 5th of April. What's today? So pretty much the beginning of April. The beginning of April, guys. Hold on, guys. I got a text. Let me see. Hold on. April, you free to do a testimony. Yes, boss. All right. I lost my train of thought. What was I saying? Oh, my bad. Okay, so yes, in a downtrend, right? Everybody agrees with that. Now, if you guys looked at the currency strength meter that I just glimpsed at real quick, tell me what you see. Somebody tell me what you see. I'm not going to say, because I know how to trade already. I want you guys to peer into my mind and get your brains working so you can develop yourselves like that. What are you noticing on, if you know how to read this? If you don't, I'll talk about it.
That GBP is strong.
That GBP is strong. That GBP is stronger than Swiss franc. Right, right. Everybody's saying that. Okay, awesome, awesome. GBP is strong. Now, guys, there's an app that I use called Currency Strength Meter. Currency Heat Wave. I like that better than this, because you always have to load this. So I don't trust this. When I when I see it, I don't trust this. True, it is showing us exactly what we want to see, but I feel like that could be misleading. So I use an application, guys. If you can see it, it has the flame around it. For anybody that's new, it's called Currency Heat Wave, and it's an app that you have to pay for like after a 30-day use, but it's like $20, man, for like unlimited time frame. I haven't had to pay it since then. Very good resource to have if you're starting off trading, even with it being an experienced trader, because sometimes you need that confirmation. Are the strengths aligning with my bias? So let me double check, because I like to see numbers. As you can see, it gives you numbers. I ain't even checked the numbers. So right now, see how it could be misleading? Right now, GBP, according to the currency heat wave, is at a 4. Now it ranges from the number from 1 to 10, guys, being that 1 is the lowest, your 5 is your medium, and then 10 being the greatest. So the higher the number, the stronger it is. The lower the number, the weaker it is. Right now, GBP is at a 4.114. And then Swiss franc is at a 5.29. Now, I do believe that we are still bullish in this market, but when you see numbers like that, it's like that could be a little bit misleading. So I actually gotta see the difference between these. Is currency strength meter like live information based off the data it accumulated? Because this is showing us live, like this is actually moving the gauges, guys, if you see that. Now, I do believe that we're still biased on the buy, but that's why also when we have these conflicting confirmations, that's why you just wait for the break and close of something. Fair enough, guys. But when we're looking at these wicks, guys, I'm looking at price. Like every time price is creating a wick, I'm looking at liquidity needs to be grabbed. So for instance, right here, oh man, perfect example. I would have no doubt that price would want to come right here, right? Reason being is that most people would be like, it retest. It did retest it to push it down. But if it's going to continue in a downtrend, it needs to come back up here to and push a candle into this liquidity zone, guys, and then bring the market back. Hell, when you look up even higher, we got even higher areas. So I would even say, I would even be comfortable saying that price could even go this high. But again, we're not shooting for the stars. Let me see how many pips that is. If yeah, let me see how many pips that is. Yeah, I would like that. Not to mention, we got a doji candle right here. Normally, that's a bank move right here. If you guys look, I'm not going to get too deep into that because I don't want to confuse you guys. We'll talk about bank moves another day, but I do kind of implement them into my conversation, guys, when I'm doing my trade training. But right here, doji, definitely a bank move. And I know it's a bank move because it went crazy down. You know what I'm saying? Like normally when you have an aggressive push, guys, the banks are the ones that are activating that, right? So look, we have a wick up here. So I wouldn't be surprised if price blew through this. Now, this is GBP Swiss franc. Not a super fast moving pair, but faster than most because it is a British pound pair. So I could see this thing blasting through here, wanting to, you know, around like, I don't know what time, wanting to retest aggressively right here because it left liquidity probably at moving higher and then hitting our target right here. So I actually like that. So let's do this. I actually like that. Yeah. 100 pips. Yeah, I like that. I like that. And then, you know, what you would do is just put your stop for best reward ratio, guys, directly below the wicks. Normally, so this is a rule that a lot of people don't talk about, guys. Here's the thing. When you're creating, this is why you need to like look for better entries as best as possible or wait for better conditions. When you're looking at a potential, like say you wanted to enter right here, like say you wanted to enter, you were like, man, I'm just going to enter right here, right? You're going to need to have your stop loss below these wicks, right? But you're also below these wicks. What you want to do to put yourself in the best possible position, bar that price doesn't decide to come down here, is go 10 pips from the original position of your stop loss. So if you're like, man, my entry's there and it puts me at a risk to reward ratio that I'm not acceptable with, what you may have to do is watch that trade and see if you can get a better entry versus your entry, or just accept that, you know, your risk to reward ratio ain't something that you like. So like for some people like me, I like doing 38 pips for my stop loss. Not everything, you know what I'm saying, but I like to keep it there, you know what I'm saying? So even if I do get taken out, I didn't lose a bunch of my account. Some people might have a wider stop loss, guys. Like, you know, I don't know, but you know, this is just we actually practice this when I first start the business. Like wherever your stop loss is, you go 10 pips beyond or whatever the low is, whatever the low or the high is, 10 pips of beyond that. So like if it factors into your stop loss, it's like, okay, I can go 5 pips after my stop loss to actually make the 10 pips. Does that make sense, guys? I hope I'm not confusing anybody by saying that. So yeah, I like this stop loss. That's actually 10 pips below here. So if it were to take us out after hitting this, then it would kind of be an acceptable loss, guys. You know what I'm saying? Like you should never be surprised about losing money in this market. You should only be surprised about gains, because everybody should factor based into their lot size, into the pips that they lose. Like this is how much money I'm going to lose if it hits my stop loss. I always factor that in. I never go into a trade not knowing what I could lose. I'm always surprised by the gain. So if I'm making $1,520, like, oh man, that's crazy, right? But it's not the surprise when it's like most people do the opposite. They'd be surprised about, oh man, it hit my stop loss, or I lost such and such money. Well, what was your stop loss? How many pips was your stop loss? What was your lot size? You should already know that information going into the trade. Y'all understand what I'm saying? So Yeah, we'll do this. Yeah, I like this. I like this actually. Now, again, I know there's people that's more experienced than not. If you feel comfortable taking a trade from here, that is completely on you guys. I'm okay with that. But again, understand the risk if price decides to push down further. So you definitely would have to have your stop loss clearing probably these wicks just in case. I don't see it coming down here. But again, we just talked about how price loves to grab liquidity, but it already moved from here. That's why I'm not looking at it to come down here. And we already established that we're all agreeing that GBP Swiss franc is bullish. But the best thing to protect us is to wait for my new guys to wait for the break and close above this or the break and retest, whatever you want to do. So we'll do that here, buy zone. And for experienced traders that's on the call, if you want to take this thing up, I am looking for a push. It just depends on if it's going to fight before push. So don't sacrifice, don't not get this just to say that I want to get this, because price could do something as crazy as like, oh, I'm gonna push up here, go all the way back down here, and then all you had to do was close out this trade, and now you have a better position to go up there. Don't be the guy who I used to be trying to hold it all. Now, if we have an intended target, yes, but this isn't our intended target. This is like a bonus. So if it does break above this, we want to wait for the pullback. Everybody's surprised, like, oh my gosh, I can't believe it pulled back this deep. It does that. The market can't just go up and down. You wait for a pullback when you see the break above here, because it's going to fake you out. Pull back probably deep, however long it does. It could come all the way back to our entry, guys, and then take the trade. So that's for the experience, guys. If you're new, just follow the trade as it is. Yeah, guys. Let me do this and then look at something else. Break and close. Anybody got a trade they took this week and may have lost it, and you're wondering what happened?
Can you repeat that question, Antoine?
Does anybody have a trade that they took this week that they lost and is trying to figure out what happened, or just kind of want to go over it? Drop it in the
I think
chat.
I know the answer to mine. I think news got me.
News did come out and start and mess a lot of people up. I wasn't even expecting that news. It kind of messed me up too, because I didn't check news, but that's really on me. So this is what you're waiting on, guys. And I'll look in the chat for anybody that may have actually dropped in a signal. Dropped in a pair. Did we got the right? Oh, let me make sure I'm doing this first. So you're pretty much looking at something like that, guys. Oh snap. Would it break in this level? If it breaks this level, now again, we have an anticipated target, but if it only gives us 20 pips, you better secure those 20 pips. It only gives us 30 pips, you better secure that. What I'm looking at is that this thing may give us another position for us to buy around here within this zone, but I'll probably release that, and then we can actually probably use that to push it all the way up here. But what I'll probably do is revise like this one once we see if we got the break and close above here, and then I'll push out another order and run the play signal, so that way everybody can take advantage of getting up, at least either going back up here or at least getting up here, however long price goes bullish for us. So let me push this out for you guys, and let's go to another example of like wick madness. That's what we should call it, wick madness. Also got a YouTube, guys. As you guys saw that, I didn't set up my thing. That must have been my other YouTube. So look out for that. I'll release it to the team, and I'm gonna go over basic stuff, guys, for like even with your new guys that you bring in for them to use and take advantage of. I'm not going to be the whole academy, but I'll do stuff where it's talking from my viewpoint as a trader, what I've learned, you know, to be the best profitable I can in this business. So, all right, blah blah blah. Let me see. So CAD, wick. So right here, as you see, guys, for example, don't be fooled. So perfect example right here. Perfect example right here, right? I like this example. And this is why I like this example, guys, because before you saw this, nobody was paying attention. They probably saw something like this, right? And was probably like, oh man, this thing might be selling, right? A lot of people think that. I was that guy, man. It rejected, it rejected the almost zone. And what I mean by almost zone is like it didn't get there. How many of us have actually done what? Not even wait for it to get to our resistance and we're already trying to sell because we have FOMO, right? We have fear of missing out. You have to wait for it to get in your zones, guys. Like touching or in it, you know what I'm saying? So like with that purple zone that I had for GBP Swiss franc, it was in my zone for me to feel comfortable. It wasn't deep in there, but it was in there enough for me to say, okay, this is in my zone of where I wanted price to come. Because a lot of us look at areas like this and then we would have pulled the trigger. Not to say that the sell would have been bad, but you got to know how long you're supposed to stay in the sell. And that's why you want to create an overall directional bias. Because look at this, guys. Most people would have saw this being inexperienced and said, oh man, this thing is selling, right? How many of y'all would have did that? How many of y'all treat Wicks as like rejection and it's like it's going the opposite direction? Just be honest. This ain't no shame game. It's like I did that when I first started, guys. Playing myself, confused, like it rejected, yo, but it rejected. How could it not? How could it not be going in the direction that I want? Is it Monisha? Monisha?
Yeah.
Awesome. I definitely don't like butchering people's names, so I definitely gotta make sure I say that. But yeah, like she the only one being honest. All y'all ain't never made that mistake. So everybody's a master trader on here. What am I doing this call for then? You know what I'm saying? No, I'm just playing, guys. But all jokes aside, dead serious. Like how many? All of us have done this just for price to do this. What did it do? What did it do right there? Somebody tell me, based off of what we've been talking about, what did price do right there? You have to say this specific word.
Collected liquidity.
No, that's not it.
Oh, sorry. I'm doing three-way, so I wasn't paying attention, but
Took out stop losses.
Y'all getting there. Keep throwing out ideas. Don't stop. Don't stop. Keep throwing out ideas.
The stop hunt, yeah.
We kind of there. We kind of there. Think about it in what we're talking about. Y'all.
It rejected. Price rejected.
No, guys. We said this. I didn't harp on it, but think these. I don't want to give it away. Think these. Something, a word that I said when we first started.
Exhausted. It exhausted.
Keep going, guys. Y'all had it yet.
It wicked up.
It filled in.
Go ahead. What's up?
It feels.
Wait, what? What was that?
It filled in the It went back in and retested the wick.
Next time we go out, DJ, I got you on the shot, man. I got you on the shot, yeah. So she basically said it, guys. It filled the wick. Understand that. Y'all were saying around the same thing, but I wanted specific words. So, y'all wasn't, it got your minds thinking though. And that's what we want. We want to get our minds thinking. So guys, when you're seeing these wicks, what do you think price is going to do? Even though that we can tell that this is bullish, what do you think that price is going to do before it decides to get bullish? Potentially, everything's a potential.
Collect a bag.
You're basically saying what we need, but more specifics, guys.
Collect liquidity.
Collect liquidity based off of these wicks, guys. Do y'all see these wicks right here? Do y'all see that? Do y'all see these wicks right here, man? That's important. Now, price doesn't necessarily have to do it right then and there, but I bet you it's probably going to come down there. So when you're entering in the market and you're looking for a buy position, sell position, whatever you're looking, and you see an amount of wicks that haven't been retested with a candle, you need a candle. So guys, even right here, perfect example again, even right here. If you saw this, what would you think to do? I mean, we already saw what it did, but let's talk like we never saw this and we made an analysis. If you saw this, what would you be thinking that the market is going to do? Like it's the first thing you open and it's like, oh man, CAD CHF. Okay, I like what that's doing. What would you think that the direction of the market was going to be?
If you're just coming in and you just looking at it, you're probably thinking it's gonna go in an uptrend. Depends on how.
Okay. That's what's up. That's what's up. I actually think that most people would look at this because they would see this wick right here. They would see this engulfing bearish candle on an hour time frame. That's a pretty strong candle, right? I think most people would start seeing this wick rejection. And again, that's why I wanted you guys to play it as if you were doing it with your first time seeing it. And we've already seen what happened, but I actually think most people would think to sell right now. You know what I'm saying? They would think to sell because they would they would see wick rejection as, oh man, it's rejecting, so it's probably pushing down. And then price did one of these numbers. Okay, see, somebody saw that and was like, y'all saw how it dropped. Somebody saw that and was like, yo, I'm selling the market and I'm good. I put my phone down. But then the next 3 candles started playing out. Clean them because wicks are right there, guys. We need to pay attention to that stuff. That's how important these wicks are. This could literally position you for entry. So say you did take the sell because you're a scalper. Your entry better have been up here. You know what I'm saying? Like another liquidity zone that it captured. Guys, is this making sense to you guys? Are y'all seeing where price is actually pushing candles where wicks are at? Even right here, y'all see that? Wick. What did price do? Push a candle to fill in that wick. What is price probably going to do right here? Push a candle in to fill in that wick, right? Y'all see that? And of course, you got to go with whatever the currency pair leading is to base it off of that, to base off of, the strength, because don't get into the habit of like, oh, all the Swiss francs are selling at the right time. And it's like, no, man, they have a dominant pair attached to it. GBP, CAD, US dollar, euro. You see what I'm saying? So you have to create the analysis. You have to create the bias, but watch out for that. So when you're blue and the market all of a sudden switches because news is the trigger, and then you're like, why did it do that? All you have to do is look below or above. It's like, are there aggressive wicks? And I suggest to you guys, start off on the higher time frame to find these wicks, like daily. That's what we did, daily time frame. Actually, since we're on CAD, I actually like this, guys. So let's actually create an analysis for this. I actually like this. Somebody tell me, I wasn't gonna say I was eyeballing it the whole time, but somebody tell me, what pattern do you see playing out in this market? What trend pattern?
Uptrend.
Hold up. Somebody said, okay. All right. Mary, Everett, I see y'all. Whoever said the uptrend, you weren't wrong. You were not wrong. But it's an inverted head and shoulders, guys. Look at this. Prove it to yourselves. You know what I'm saying? Probably be more like this. Yeah. Wow, that's crazy, right? That's crazy to go on with your confirmation to say that, oh man, this thing might keep pushing up. I definitely see it. To me, this is the neckline. You got a little bit of it. Well, I really think this is the neckline, but you can't really be too perfect with head and shoulders. So I'm looking at this neckline, probably up here. We got our break. We probably got our return to grab some liquidity. Let me see. I like it actually. Oh man.
What's their own name? Like, what is
I actually do a 25 pip stop loss on this. And then our area, our target would be this wick right here. So if you guys ever wondered where people were creating their targets from, like look at what the market is doing. You see this wick right here? The only thing that I did was when I spotted this wick was look to the left, because if I draw this all the way out, wow, that looks like if price was selling, what does that look like? Break, potential retest. But again, we don't want to sit here and say that price is going to be selling from here. It may, but what we want to do is say that it may sell from here, so we're going to collect our profit from here. Y'all got that? So yeah, I like this. Yeah, I like that. Oh. And then what time do we have? So that's pretty much it. Well, I'll probably push this out. I'll probably push this. Nah, we'll do it. We'll do it here. We'll do it here. Because I wanted to look at another pair. I didn't want to swamp you guys with the same, you know, like we got a bunch of Swiss francs. I want to look at something else. I think I was looking at Euro NZD for us to sell. I'll check it out. By a bank number too. That's awesome. Bank number. Yeah.
And so I have some questions in the chat, by the way.
I'm sorry. I'm sorry. What's going on?
I know you're getting the zone, so I just wanted to let you know.
Y'all know me, man. If nobody says anything, I would think I'm on this call by myself, like straight up. Look left, right. Let's go. Awesome. Can you talk a little bit about crypto? I had a question in the trade chat that was never answered. Okay, got you, Mary. All right, so let's do a buy limit on this, man. Now, for everybody that's a little bit more scarier than the average trader, and I say that with respect, it's okay to be scary in this market, guys, or cautious. You know what I'm saying? Just set an alert if you don't want to do the buy limit. But I'm doing the buy limit because this may activate when we're asleep. And then we got a pretty good risk to reward ratio, 25 pip stop loss. I barely even give that out. So I'm feeling comfortable pretty much about this trade, and it's at a low risk. Even if we have to talk about if we were to hit stop loss, guys, you have to be prepared for that. So it's like if we were to hit stop loss, that's 25 pips. Do the math in your head, depending on your lot size. You know what I'm saying? Oh, it'll probably come up here, to be honest, since we got that bank move. But it'll probably fight after it gets here. It'll probably fight. So for you guys that's experienced, you can probably take it all the way up here for your bonus target. Yeah, I like that. I like that because that's a bank move. It just depends on when it's going to try to do that, because price, you know, it don't just go straight up and down like we want, guys. It's going to give some fight. Maybe even when it gets up here, start consolidating, throwing people off, probably retest back here and then shoot up. All that crazy stuff that we'd be like, can you just go up or down? You know what I'm saying? So yeah, we'll do a buy limit for that. Oh, I gotta back out so you guys can. Hopefully, this chart doesn't confuse you guys. I'm leaving it up for the guys that can actually ride this thing all the way up here. So bonus target. Did I throw out that other analysis? Did I throw out GBP?
You threw out GCAD. No, GBP CHF. You did, yeah.
Okay, boom, boom, boom. Swiss franc, blah, blah, blah. No, I did. Let me see. You guys got to click on it in the chat. Yeah, I threw it out, Mary. It's in there. Did you get in the chat late? I'll copy and paste, or can somebody else just copy and paste it back into the chat for people that may have gotten on late? Yeah, let me look at EN real quick because I'm looking at this thing to sell. Yeah, I'm looking at it to sell. So here's one thing I want to talk about where it's like all of us get our butts whooped by overcomplicating this thing, right? And one example is like not looking at the basics of what price is doing, right? Now, and the reason why I say that is that, what time frame was it? Okay, so this time frame showed me a lot that people probably wouldn't even pay attention to, but if you just looked at this chart, what would you say that price is going to do? Just off of, you just looking at the chart. This is the information you got. We got way more information than before, but what would you say that price is going to do?
Continue to buy.
Go up, go up. Everybody's saying go up, right? I actually don't think that. I actually believe that price is going to sell. And the reason being is because there's a lot of stuff that we overmiss. Now, again, everybody's analysis is buy over mine, but here's my ideology behind that, guys. When you turn this thing to a line chart, what do you have right here? What is this right here? What is this called? A double
top.
A double top. There we go. This is called a double top, guys, right? What does a double top indicate?
A bearish reversal?
You say bearish reversal, pretty much that the market is selling. It's supposed to be. And we do have that information that the market has, in fact, sold, right? Everybody agree with that, right? Now, when that happened, what was created? When price shot down, what was created? And I don't have any better way to answer these questions, guys. I'm just hoping everybody's following along to kind of get their mind thinking. What was created, though, when price dropped down?
A floor or support? Yeah. Okay.
Pretty much another level of resistance, right? The floor was created. That is true. A floor was created. That is very true. But it also created another level of resistance that price shot down from. What do you need to have with the downtrend? What creates a downtrend?
The break of a low.
Lower lows.
Who's saying that? What was the last person saying it? Lower lows.
I said lower lows.
Lower lows and lower highs, right?
Right.
Now, we have a support. We have an even level of support. So we really don't have any information versus where price came from. What is this? What is this in orientation to this? This resistance level in orientation to this?
The lower high.
Let's go. Do y'all see where my mind is at now? Now, here's something else that I can add on to that to make me feel more comfortable saying that price is doing this. Y'all know I'm an advocate for patterns in the market. What's this pattern right here? Potential. What type of flag?
Ascending channel.
No, we're talking flag, but what type of flag? maybe
A bear.
somebody's answering in the chat. I'm sorry. I'm listening to somebody may have said it in the bears. My bad, guys. All y'all that said it in the chat. Bearish. A bearish flag, right? Now, this is just me, guys, because as price created this support, as price created this resistance, I'm looking at it to continue breaking levels. Pretty much the bears are in the market right here, guys. And what would it be looking to do? Oh my gosh, man. We have liquidity down here.
No.
Also doji. We have liquidity because we have strong wicks right here on the 4-hour time frame. We even got wicks down here. I'm not sure it's ready to go that far down there, but we got wicks. We got information, enough information to say that price should come down here. So I noticed that everybody was saying that price, that it looks like it was bullish, correct? Okay, say that price is bullish, right? What else would it need to do to continue in a bullish direction? If this overall,
Bowser is meowser.
okay, man. If this overall analysis is bullish, what does price still need to do? Because again, we can't negate the basics, guys. What does price still need to do if this is going in a bullish trend?
Okay.
Say that. Who said that?
I said retest. Is it retest?
Let's be specific. What does it need to retest?
The support.
That previous low.
Not the previous low. We said this is an uptrend. Yeah, y'all said that this is the uptrend, right?
It would need to retest the previous. Okay, wait a minute. The previous low. The previous high.
Y'all said this was an uptrend. So keep it in your thought process that this is an uptrend. If this is an uptrend and we know that break retest happens, what does it need to retest to continue in this direction?
It doesn't need to it needs to retest the high, the previous high, and break it, or I don't know.
No, y'all are saying
it needs to break the previous high to the left, retest that channel block or that blue box that you have on your chart, continue going up.
So it broke out already, guys. Don't get frustrated. Y'all are saying the right. This is important to get your mind thinking. So don't feel like you don't know. I think it was golden. You actually said the right answer. It needs to retest a previous high. If it broke out and we're looking for price to continue, depending on what it's doing, because we could easily say that that level was a level of support, right? When you go back here, you can easily say that that's a floor. Oh man, that's a floor, right? Yeah, you can easily say that, right? That's a floor. True, but floors are meant to be broken, right? And yet it has yet to return to the area where it broke out. Where's the area where it broke out of? Pretty much right around here. I would even say these wicks. I would even say stronger right here, that this is the exact area that price broke out of to go on its bullish run. So if it's going to continue to go on a bullish run, it probably needs to fill this out and then push up. Does that make sense, guys? Drop a 7 if that makes sense. Yeah, I like that. So what we're going to do is we're going to sell this bad boy. But we're going to wait for the break and close below. But y'all see how literally what I'm depicting here is that if all you had was the line chart, you got your higher high, which you had your double bottoms come from. Boom, created a low at a convenient support, but it created a lower high. Okay, is this our start of our downtrend? You see what I'm saying? So our next move should be even lower, then decide to bring the market up, crazy, you know what I'm saying? Like pretty much aggressively. So let me actually find that because we can make that our target and then go from there, man. And then I'm gonna talk about crypto, and that's pretty much it, guys, because we are already at 8 o'clock. So I don't try to be holding us that long. It's already at my cell zone, but let's see. Look at all those wicks down there. Do y'all see that? Do y'all see that? So even if it was to go by, I need this thing to clear down here first. You see what I'm saying? Let's do this. when y'all make like millions of dollars, just I'll just send you my cash app, you know, just 10%. That's all I'm asking for is 10%. I'm just playing. Just 10%. Y'all ain't never watched
Post your cash app. I got you.
You said what?
Post your cash app. I got you.
Okay, cash app. All right, you know, team player. 10% for your manager. All right, so clear this wick right here just in case you wanted to do some funny business. We are at our zone, to be honest. Let me see what this is. Oh, 63 pips. So I would say market execution, guys. That's what I'm about to do. Market execution. I like this. And what we're going to do is have it directly. Yeah, we're going to keep it 50. So it's like a 1 to, I don't really like 50 pip stop losses. Let me see if we can go any lower because we can probably go lower. Yeah, guys, you can enter market execution. That's what I'm going to do. Okay, all right, bad. So I have a target now. I was like 63 pips. I just, for a good risk to reward ratio, like, yeah, that's better. Yeah. It's almost 97. Let's do it right here. Yeah, I like that. I like that. 90. All right, that's not being too greedy. Where is it at? So just be, for everybody to enter market execution, just be aware of the return. So if it breaks, it might fill this and then return to this position. So, let's what am I trying to do? Okay. 3-5. I'm actually like that entry. 67380. 67380. My bad, guys. I'm entering in this blah 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 25. So our TP is going to be 1.66025, not 26. I like to keep it at bank numbers. 25. Yeah. So then crypto is going to be our last joint, guys, and then we're going to go from there. Oh yeah, I think we about to have a field day. I would, you know, how many of y'all are like 30 days less in this business already? 30 days less. Let's see, 30 days, blah, blah, blah. Yes. Let's be patting yourselves on the back because y'all did this analysis. If we smash again, this should be around our first target. Again, watch for the return. So don't let it come down here just to push back up here. What I will say is, like, if it shows that, get out, then enter on pretty much the retest. Man, my tooth hurts, yo. Oh my gosh, that hurts. Let me push this out to you guys and we should be making some money. And then I'm gonna look at crypto and that's it because we're already pushing it past, guys. I like to keep things, you know, right on time. So none of these trade setups go and run the play when I do my classes. You have to be on my call to get these setups, guys. I do not push them out and run the play. That's not saying that I don't. I mean, obviously, y'all see I push out signals and run the play, but I'm not going to do it because it's like everybody has, you know, their own time that they can make for things, right? If you really want it, you're going to make time for this call. I really wanted it. I made time for calls that it seemed almost impossible to get on because one, I wasn't looking to try to make the money. I was looking to try to get the knowledge. That's what I care about, guys. If you jump on my call and you like, man, this dude ain't throw out a signal in the first 15 minutes, I don't get down like that. I don't. We talk about knowledge because I want to be able to help equip people where they don't need, me to be on these calls, maybe for just, reference points or peering into my brain. But at the same time, it's like everybody should be able to do this by themselves. Again, you don't have to be a master trader, but you better master the skill set. I don't care if you're a chairman and above or, what are you running for? Because it's like, guys, this is money. Why wouldn't you want to learn this and make money, especially like when you get to the chairman level? Oh my gosh, when I hit imagine when a trader becomes chairman 10 million. What? You can literally put $1 million in the market that day. Y'all playing around with this. I ain't playing around with this. Let me go to crypto before I start preaching over here. So what was your question, Mary? If you're still on the call. Are you still on the call, Mary? And I'm starving.
Sorry, I'm multitasking with bedtime and doing this. I'm trying to carry you around on my phone. No, I just dropped an analysis in the VIP trade group earlier today asking the question about Litecoin and cryptos and how it respects the 50 EMA. I dropped a chart in there too, but I don't know if I'm correct. I haven't really dove very deep into trading crypto. I kind of stopped for a while because I was getting burned, and I'm trying to do my homework so I can get better.
Right. So cryptos, I don't care about EMAs with cryptos. I don't use no EMA. Like, yes, y'all see EMAs on my page, but I don't pay attention to that. I mean, maybe the 50 just because it's showing the trend of the market. But cryptocurrency has some of the best market structure out there. The only thing that burns people is these wicks. This is why we went over wicks today. As you guys see, there was a wick right here, right? What did price do? It came back down to collect that liquidity. So when you're looking at cryptocurrency, the best thing for anybody is to turn into a line chart when you don't understand the wicks, because you're trying to, it's like, I need to understand the candlestick because that's the overall movement, but those wicks are the ones that bite me in the butt, right? This is where it comes into like, hey guys, following that break and retest on cryptocurrency, you probably want to warrant that. You know what I'm saying? You probably want to really use that because cryptocurrency literally acts just like that, guys. So right here, we were doing this, and now I did this the other day where I was like, oh snap, man, this is a inverted head and shoulders, like that slanted kind. So I felt comfortable saying that price is going to continue to buy. Not to mention, I track cryptocurrency on a bigger time frame anyway, guys. If you see, I have these boxes because I've been tracking pretty much the uptrend movement of these currency pairs, and I do that with Bitcoin. Did I do that with Ethereum? Yeah, Bitcoin. Oh man, we could have taken that. I'm already in Bitcoin, but whatever. Bitcoin, Ethereum, and guys, they follow a structure. You just have to identify what that structure is. That's all it is, guys. And as you see right here, if I drew this line all the way out, I could have had a perfect entry. Price loves doing this, like giving you these strong support zones and then breaking it down to go to what? Oh my gosh, what were we talking about on this call the whole day? Did price not go to fill this in? Is that not a wick that price filled in? So even if you did a buy limit down here, you probably would have been protected. I mean, maybe not a buy limit. Yeah, probably if you did it at its lowest point. At its lowest point, you could have did a buy limit. Close the phone because watching it do all this, you would have jumped out of the market. Like, delete your MetaTrader 4. So it's like, I got a comfortable number in there that even if it hits stop loss, like I'm not going to be devastated. And I feel like price is going to be doing that. But look, exact example of what we was talking about. Price came off. So people were probably confused. Like, how is Bitcoin going down this far? Well, if you look to the left, oh my gosh, there's wicks over there on a daily time frame. On a daily time frame. You don't think that thing is coming to collect that? Blue plus all this. So guess what? If price shoots up, right? Which cryptocurrency is known for this. Like, it gives you the pushes. And if you identify the support structure, it may be gone. So it may never come back down here. But guess what? If it came back down here, where would you be looking to buy? Probably around here, right? Or probably around here since we have even lower wicks. Probably around here just because this would be actually close to the area of break and retest. So if cryptocurrency does decide to come all the way back down here for whatever reason, or Bitcoin all the way back down here for whatever reason, I really don't see that happening. But again, this is market structure. It should, in theory, come back down, but it doesn't have to. This would be the area that price would probably come back to. One, we have a level of support where it has liquidity at, and we have a high that it broke out of. I could even see all the way down here, like lining up with that. So it's just really about understanding, like I'm telling you guys, if you break down like doing it in a line chart and break it down to its most simplistic point, which is like a line, you'll start seeing that, man, I can follow these movements of these trades. The only thing that I have to factor in is the movement that I can't predict, which is the wick. But it's like, if I see a wick down there, I'm gonna keep an eye on that. So if I am, entering in the market, I'm probably scalping like, 100 pips there, 100 pips there, until I look for the big movement. I see that thing start crashing. I start looking at where it can head. I just got me an entry because all I did was identify the wicks. Y'all see how easy that is? So that's pretty much it, guys, man. I appreciate each and every one of you on this call, guys. Can you go over how you use your indicators? I don't use my indicators necessarily, Jasmine. What I would say is that I can tell you what the indicators mean, right? Because I'm not the indicator expert. It's just on there to make me, I don't know, feel comfortable. I know what they are, but I don't use them. So for instance, my blue, which is my 10 is pretty much the overall direction of the trend, right? So it's following the pathway of price is actually pushing down at that time, or price is pushing up at that time. And then my red is pretty much the actual trend. So it's mimicking the actual trend of the market. And then my 50 is pretty much my overall trend. So when you see like the 50 respecting this support, as you see that respecting the support, it'll probably respect this support and take it all the way up. That's pretty much giving you an overall bias that if you see the 50 touching these areas like a trend line, you probably want to stick with the buy and just try to find the pullback. You know what I'm saying? But I'm not the indicator guy. Gilberto would be more suited for that, to be honest. That ain't me. I actually had to ask them, like, what did all this mean? Like, because I'm not the indicator guy. I'm pretty much a naked trader, guys. I use a lot of tools to help me, best find my position. I mean, I use Fibonacci and stuff a lot. But, today I wanted to keep it basic, that if you didn't know Fibonacci and all the crazy techniques that they have out there, you could still be a profitable trader by understanding this basic. I think it's basic, and I'm not saying that to, offend anybody. I say that you're going to start realizing that it's basic, because when you get to advanced, you're going to be like, all this is a support and resistance. All this is a supply and demand. Oh, all this is a break of structure. You know what I'm saying? You're going to teach your mind to be like that. So guys, man, that's it. I hope y'all make a bunch of money. Use these calls to leverage, your business. So, you make money on this call. You not necessarily shout me out, but you just shout out that you were on the call. It does help to shout out somebody that, has some credentials, on their person. But guys, use that to fuel your business. Anybody that's trying to go chairman, I mean, everybody should be trying to go chairman. If you're not trying to build, I don't even know why you're still here. And I ain't saying that like disrespectful. I used to be all like, oh, I'm trading and blah, blah, blah. But if you understand what you could do with $10,000, like I turned $99 into $1,400 in a day, guys. So what my thought process is at? If I'm thinking that if I had $10,000 just to throw in the market and not worry about, if I had $1 million to throw and I did those numbers, you see what I'm saying, guys? It sounds a little bit different when it's like what I can do with it versus like, oh, I need to get there because of this. Like, no, it's what you can do with it on the trading market. Because I'm going to be one of those guys that turned $10,000 into $1 million. I promise you. You feel me, family? So I'll see you guys next week. You know what I'm saying? Like, I'll see you guys next week, man. So, move your stop loss according. I'm looking at this trade. It looks like it's going to do what we want it to. I'm not going to give out no direction. So if it decides to reverse and takes us out, that's just what it is, guys. We got other trades that are suited, but we should be looking to go in profit pretty soon, man. So I'm excited, man. Let's make money, close out the week strong. Don't try to be greedy, man. use 3% of your account or 2%, whatever you're risking, guys, and then just compound it. So if it's like I can only make $10, keep making $10 until it's at $100. You can only make 20, do the, you know, rinse and repeat, guys. So I'll see you guys next week, man. Thank you so much, and you know, have a wealthy Wednesdays, guys.